Hello and welcome to our latest podcast. I'm delighted to say we're joined by Charlotte Cuthbertson, co-manager of MIGO Opportunities Trust. Hi, Charlotte.
Hi.
Now, MIGO is part of the AVI stable, which is Asset Value Investors. This trust is unique in that it invests in discount opportunities in other closed-end funds, where the managers believe there's a catalyst to unlock value. And that means it can invest in any geography or asset class. So, Charlotte, can you talk us through your strategy, how you unlock value and make money for your shareholders?
Absolutely. As you said, what we're looking for is discount opportunities in the closed-end sector. And there's really two ways that we look at extracting value from these discount opportunities. One of them can be through corporate activity, so whether that's M&A, whether that's takeouts or private capital coming in, taking the assets. And sometimes it's just the recovery of the share price. If we see some shareholder friendly things being done by the managers and the board, we can see a recovery in share prices organically, or the underlying portfolio comes back into favour. So there's lots of ways that we can extract that value. I think what's quite exciting at the moment, and I think we'll come on to it a bit later, is the fact that we relaunched the trust sort of June, July last year. And part of that relaunch included having activism as more of an overlay in the trust and being much more as part of the investment process. And so that is probably a really key example and a key way that we can extract value and narrow those discounts.
Right. No, thanks very much. And I guess we'll get into that revised approach in a minute, but just stepping back, I mean, how has the trust landscape changed in the last sort of 10 years?
Hugely. So if you look at sort of 10 years ago, or even further ago, really, if you look at sort of post the Great Financial Crisis from about 2009, interest rates were very, very low, and we saw just a massive amount of issuance into the alternative sector in the investment trusts. So that's sectors like renewables, property, infrastructure, and lots of these trusts were launched in order to be products for wealth managers and IFAs who were pretty yield starved at that stage, because their traditional source of income, it would be gilts, were yielding pretty much nothing. And so there was just a huge boom of issuance over the sort of the last decade. But if you rewind to sort of post 2022, when we saw interest rates rise, most investors went back to those more traditional sources of income, and you just have that classic sort of supply demand dynamic in a market where you have an oversupply, a lack of demand, and demand decreasing, and therefore discounts have widened considerably, in that area. So it's a very, very different landscape than from even when I first joined the trust in 2017.
You mentioned actually, I thought you were going to preempt me then for a moment, Charlotte. Yes, you mentioned you changed your investment trust. It's MIGO 2.0, isn't it?
Yeah.
Last July. So could you just talk us through a few of those changes?
Yeah, and I think it's a lot about reflecting the current market and what's been going on in investment trusts in the last couple of years. So I was joined by my co-manager, Tom Trainer, who has run the closed-ended fund sleeve of AVI Global for the past, I think, sort of 10, 15 years. And he joined me as co-manager, and my old co-manager, Nick, stepped down and retired. And it gave us the opportunity to really assess MIGO and ensure that it was the right product in the right space for the current market backdrop. So one of the things we did was we made the portfolio more concentrated. So we reduced the amount of names. We're targeting sort of 15 core holdings. So that makes up about 85% of our portfolio currently. And that's really about putting more money in our best ideas. We do a considerable amount of work on the underlying portfolios and on our underlying trusts. And so when we want those investment theses to come through, we want them to really pay off for shareholders. And we also moved away from having a lot of the equity exposure. And this is really a backdrop of the last couple of years where we've seen equity trusts discounts narrow considerably. So the average discount is sort of anywhere between 5 to 8%. Obviously, the last few weeks have been have changed that a little bit, but mostly we've seen discounts very, very tight in the equity space. So we've moved the portfolio more into those alternatives where we see a lot of value, and also where we think we can be massively value add for our underlying clients, who maybe don't have the time or the expertise to really get under the bonnet of some of these trusts, how they're valued and what these assets are truly worth. And then finally, we made sure that MIGO really was shareholder friendly. I mean, we've always been very considerate about our shareholders, keeping our discount tight. We buy back and we issue in order to keep the supply and demand in equilibrium in the market as much as we can for MIGO. But we also reduced our fee to 35 basis points, but introduced a performance fee. So, you know, we get paid when we if and when we produce good outcomes for our shareholders. So it's all about that alignment. We also capped the trust at 150 million. Again, it's all about prioritising shareholder returns rather than just asset gathering. And we think the enemy of investing in investment trusts can often be size, where actually a lot of the more interesting trusts are a bit further down that market cap.
Yeah, that's absolutely fascinating. No, thank you. And so you're activists. So what will prompt you to get involved in a situation? And perhaps would you talk us through one or two case studies?
Yeah, so I mean, activism engagement is, as I mentioned, is quite central to our investment process. So it would be unusual for us not to engage on some in some variety with all of our holdings. Obviously, some require more work and more time bandwidth than others. Some it's very light touch, and we think that the board and the managers are absolutely doing the right thing. A good example of that would be Georgia Capital, where we think they've got an excellent capital allocation policy, and that's really paid dividends, as you've seen from the shareholder returns there as well. But sometimes it's it takes a lot more, and what we're really we're always thoughtful. I mean, capital allocation is probably the primary thing that we engage on. When we have a lot of these trusts trading on enormous discounts, often the best thing that they can do with their capital is sell some assets and use that cash to buy back shares. It's very, very difficult to get a better return than buying back your shares if you're trading on a 30 to 40% discount. Looking at tender offers, looking at potential wind downs. If the case calls for it. And so probably, speaking of wind downs, I would say Chrysalis is probably a good kind of live-ish example. Obviously, we can't give you too much on some of more of the current ones, but I think Chrysalis is a really good example of the trust was trading on an enormous discount. And between the AVI funds, so that's AVI Global, MIGO, and our open-ended fund, AVI Worldwide Opportunities, and our SEG mandate, we have about 18% of Chrysalis, which we bought when it fell to a very large discount. And obviously, it had been a bit of a wild ride as well for other investors. And so we engaged a lot with the board and with the managers and with other shareholders. And I think that's quite a key point about our activism, is that it's a lot about creating consensus with shareholders, with other shareholders, and finding a pathway through. And ultimately, ourselves and other shareholders felt that the right path was to go into an orderly realisation, and those things have been voted on. Those proposals have been voted on in the last couple of weeks, and we're delighted to say that they've gone through. But it was a situation where the right thing in terms of for shareholders was for the wind down of that trust, selling off some assets, selling off their assets and handing cash back to shareholders rather than reinvesting and allowing the trust to continue.
Right, okay. I guess which parts of the closed-end market have the biggest discounts, and are there sort of particular reasons why?
Yeah, I mean, as I mentioned, alternatives, but that's obviously quite a broad brush sector. I mean, what we've seen is, if you look at some of the graphs of the discounts in the alternative sector, what we've seen, unlike property, where there has been some narrowing and we've seen a considerable amount of takeouts, something like renewable energy, those discounts have continued to widen and widen and widen. We do have a chunk of renewable energy in our portfolio, but we would say that we don't have a huge amount of the more sort of standard just wind and solar trusts. Our biggest holding is VH Global, which is in that sort of renewable energy bucket, but a bit more different than a sort of just a wind or solar trust. But it's been, I think for a lot of renewable trusts, it's been quite clear that it's been very difficult for them to sell assets. It's not necessarily that the boards are unwilling to do what shareholders would like, which is to sell assets and either do tender offers or buy back their own shares. It's just actually that market backdrop is not particularly great, particularly in the UK and Europe at the moment, and therefore it's I think it's been quite disappointing for shareholders. The Iran war has probably changed that a little bit. Obviously, that's been helpful in terms of higher power prices. However, that also the other side is that means that you are unlikely to get as many, if any, interest rate cuts, which again, means that investors don't necessarily want to go to some of these yielding alternatives like renewables. So it's definitely an area that we have been increasing, but very much being very selective in our stock selection, and rather than just buying that all of these trusts because they look cheap.
Yeah, I mean, I recall you published when you put out MIGO 2.0 last summer. There was a fascinating table in there of the discounts, and I hadn't seen that as well as the percentage discount, you actually put the sterling amount as well, which was really interesting, and I hadn't seen it presented that way before. I have to say, looking around, there's a lot of really interesting stuff. You've just put out a note earlier this month, didn't you, on MIGO 2.0, and I think your fact sheet is coming out tomorrow, if I'm not mistaken.
In a couple of weeks. So we do a big sort of quarterly fact sheet where
Okay.
you write a lot more about
Is it the
our
newsletter that's
underlying
out tomorrow?
portfolio.
It might be the newsletter that
It might be
says,
the
says,
newsletter.
says it's out tomorrow. I mean, Charlotte, that's brilliant. Thank you. I mean, MIGO, I don't know about you, James, but I mean, it just sounds perfect. If you are an investor that wants to play this narrowing of discounts, but you don't really know where to start, then, as you say, Charlotte, you've done the deep dive on these things. You've done your DD, and it's a really great place for people to start, I think.
Yeah, absolutely agree.
So, folks, go to the AVI website, have a look at all the good stuff that's on there. Look out for the newsletter. I think it's out tomorrow, and the fact sheet, which will be out in a couple of weeks. Thank you for watching. Don't forget to like and subscribe if this is your first time here. And we have another special edition tomorrow where James and Steve will be talking to Laura Foll of Law Debenture. So stay tuned. Bye for now.